Good morning and welcome to the First Rate FX video podcast on Wednesday the 10th of November. Now last week the major news throughout the globe was the quantitative easing measures. Now in the UK the Bank of England announced that there would be no further quantitative easing, and this surprised a lot of people. There'd been murmurs and rumours within the market that the Bank of England may start to increase quantitative easing over the coming months and towards the beginning of next year, but the Bank of England made no measures and also kept interest rates on hold. Now, the other side of the Atlantic, the US actually decided to increase quantitative easing by $600 billion. Now, this surprised people. Most people thought there would be an increase in their asset purchase scheme by possibly the tune of $500 billion. So, an extra $100 billion from the US there, which will last them towards the end of next year. Now, they also kept the interest rates on hold for the foreseeable future. Now, they did mention that this is going to be for a prolonged period, so a lot of major banks now are thinking that they'll keep interest rates on hold throughout all of 2011, and some of them are saying throughout all of 2012 now, possibly Q1 2013 before we see an increase. Now once again this week we've got a lot of major news coming out. From the UK we've got the Bank of England speech by Governor Mervyn King. Now he'll talk about quantitative easing for sure. He'll also talk about interest rates and his view for the economy. Now he did mention obviously there's no quantitative easing so far this month, but he may give inclinations that there will be further measures in the coming months. So if so, we may see a big sell-off for the pound. However, if he does mention about the possible increase of interest rates, we may see a climb for the pound against the euro and the US dollar. Now we've also got the ECB monthly report, but perhaps more importantly this week we've got the European GDP report. Now there's a lot of focus within the Eurozone at the minute about their instability through several of their nations, so an increase in GDP will actually stabilise the euro, and we may see further declines against the dollar and the pound. Now finally we've got the US trade balance to be released this week as well. This is a topic of much discussion, especially since President Obama mentioned it as a big cause for concern. Now if the trade balance or trade deficit reduces, this is going to be very good for the US, and we'll probably see a big buy into the US dollar, and we'll see the dollar weakness reverse and probably climb back against the euro and back against the pound. Thank you very much for listening to the First Rate FX video podcast.